Bloomberg, October 20, 2018, 6:14 ISTStock-market turbulence and a sharper-than-expected economic slowdown are ratcheting up pressure on China's leaders, just as Donald Trump does the same. A day after the Shanghai Composite Index plunged to a four-year low and Trump took new steps to escalate his trade war with Beijing, third-quarter growth figures showed China's economy expanding at the weakest pace since the depths of the global financial crisis in 2009. Faced with a growing panic in the stock market, the chiefs of China's market regulator, central bank and financial watchdog all issued statements calling for investor calm. Economic policymakers including Vice Premier Liu He, who also weighed in on Friday, are now left walking a tightrope. To fortify the nation's negotiating position on trade with the Trump administration, they need to stem the $3 trillion stock rout and support growth at home, all without giving up on their goal of containing soaring debt levels. China is under pressure on multiple fronts, said Michael Every, head of Asia Financial Markets Research at Rabobank in Hong Kong. Logically, all this pushes China to make a deal, yet I don't think there is a deal to be had. While the Shanghai Composite opened lower on Friday morning after the official statements, it rallied in the afternoon and closed with a 2.6% gain. Some investors speculated that China's national team of state-backed funds stepped in to add some oomph to policymakers' verbal intervention. China's stock market is still the world's worst performer since January, losing nearly enough value to wipe out the combined market capitalization of Brazil, India and Russia. Losses in China have largely been fueled by concerns over trade and economic growth, but the rout accelerated this month amid a wave of forced selling by leveraged investors. About $600 billion of Chinese shares have been pledged as collateral for loans, leaving their owners vulnerable to margin calls as prices sink. Download the Times of India news app for latest business news. Trade war with U.S., China's third-quarter GDP growth slowest since 2009. SoftBank's Sun stays calm amid Saudi turmoil. Massive tax scam cost Europe €55 billion, report.